feel that because of the rural stress which we are seeing in the markets, I mean in the rural market parts of the India, the Nestle is sort of a little weak on that front. The urban part is doing well with Maggie and Kit Kat and etc. As far as the rural stress, once that goes out because of a decent monsoon, then I think stock can make a comeback. Probably later in the quarter.
All right, and if you look at FMCG earnings so far, HUL, Nestle and other major players, it's been a mixed bag. Any particular cues and trends that you're picking up for the quarter gone by?
Yeah, so FMCG has been a mixed bag. I mean, most of the, FMCG, you can probably divide it into two parts. I'm not talking about like the discretionary consumption. I'm focusing only on the FMCG part. So HUL results were actually quite disappointing with respect to confectionery items, with respect to the basic staples items. They have cut their guidance also, and they still feel that rising commodity prices will hit them. And on the other hand, we have something like a Colgate, which has actually given a higher volume guidance, for the coming quarters, and that was actually up about 5% today. So I think it's a mixed bag. There are companies like Nestle and Colgate which are doing well despite the rural market slowing down. But at the same time, things like HUL, they are struggling a little bit because of the higher commodity prices.
All right, let's quickly run our audiences through numbers as they stand from Nestle's kitty. How are numbers looking like?
So Shweta, the numbers were above the street's estimates. Nestle reported a consolidated net, a jump, a 36.8% year-on-year jump in consolidated net profit at 698.34 crores versus 510 crore in the previous quarter of the previous fiscal. And revenue jumped about 15%. Meanwhile, EBITDA was up 24.7% and margin improved by 170 basis points. Now, one of the things that the management of management of Nestle said was that they that in this particular quarter, they had a broad-based growth across all segments, and domestic sales improved by about 14.6%. Now they saw double-digit growth in Maggi. Its milk products, nutrition-based products delivered a strong double-digit growth despite inflationary presence. But I think what disappointed the street was, as was in the case of HUL, that the volume growth was below the estimates of the street.
Okay, volume growth was below estimates, and that perhaps could have been a disappointment. Stock closed slightly lower, and obviously investors not very happy with a sort of mixed reaction that is coming in as to whether these are quarterly results for the calendar year or quarterly results for financial year. All of that and more, of course, weighing in on Nestle's stock. But another interesting stock that we continue to track is that of ACC. ACC, the cement major, has also posted a profit of 105% at 466 crores. Stock was up about 1.2%. Let's quickly go to Amit. Amit, ACC results in line with expectation, also perhaps giving us a sense of how the cement industry is performing, and particularly good news for Adani.
Yeah, actually, I haven't seen the results in details, but I've just seen the headlines before we started. So yeah, I mean the ACC results were a little bit surprised. Actually, it's above the estimates. Recorded highest ever revenue of almost 5,200 crores. PAT jumped more than 100%, driven by that higher revenue. So yeah, I mean things probably look good on the headline numbers. The details need to be seen, why and what pushed the revenue so higher, and what type of construction has, sort of pushed that number so high.
Amit, let's run these numbers for our viewers once. My colleague here has the numbers with him, and I'll also read out statements that have come in from ACC so far. So that will give us a sense of what worked for ACC.
So net profit, Shweta, more than doubled from 227 crore in Q1 FY23 to 466.1 crore in Q1 FY24. Now revenue also jumped by about 16% from 4,468 crore to 5,201 crore. EBITDA improved by 81% year on year from 425.8 crores to 770.9 crores. Meanwhile, margin saw a 530 basis point jump to 14.8 crore from 9.5%.
All right.
14.8% to 9.5%.
14.8.
Good set of numbers. Great set of numbers coming
Great set of
from
numbers.
ACC.
105% increase in PAT is exceptional, and in fact beats market expectations at this point.
And
Ajay
you even
Kapoor,
saw it in
who's
the
there?
stock's performance. It was trading with moderate gains, and we saw a sharp spike in the last 5-10 minutes,
And
right as the results came out.
Okay, so a sharp increase in stock prices, and hopefully some of it will be seen tomorrow because the result came out later, just before the markets were closing. But Ajay Kapoor, who's the whole-time director and CEO of ACC, said that the growth was driven primarily by robust demand for high-quality cement products across all market, as well as continuous effort by the company to optimize operations and reduce environmental impact. Not sure about environmental impact, I can't vouch for that, but clearly demand for high-quality cement on the rise, Amit.
Yes, I think generally, what we have seen and evidence on the data is that, in a pre-election year, there is a huge rush to complete projects. And that's what we are seeing happening right now. And if the monsoon is, decent and we don't get too much damage as far as the construction activities are concerned, then there will be, very good tailwinds from rural demand also coming in later in this quarter. So FY24, I think overall H2 really looks very strong in terms of demand growth. So demand might go down a little bit, closer to the elections. But I think 6 months into the elections, we could see a good demand front happening. So I'm not too worried about the demand front. It's just that in a cement cycle there are external parameters like fuel cost, etc., which sort of plays a joker in the pack kind of thing. In fact, I'm actually looking at the details of ACC, and the fuel cost is down by about 15% for the company year on year. Remember last year we had Russia-Ukraine war, so the fuel cost really went up. The crude went up to $130. So I think there is a base effect here where the cost has come down for 15% year on a year-to-year basis. So the operational efficiency improvement has helped them optimize cost and push revenues higher.
All right, operational efficiency has worked for ACC. JK Lakshmi cement results are also awaited, are expected to come out today, which will give us a picture of how cement consumption was in the first quarter of the year, and also give us a sense of how infra development and what is sort of impetus towards infrastructure development, and hence the consumption of cement industry, how that pans out. We'll be able to get a clearer picture by tomorrow. But Indian Bank just came out with its results. Run us through the numbers.
So the public sector bank has reported a 40.8% year-on-year rise in its net profit at 1,708 crore for the April to June quarter. Now the gross non-performing asset ratio declined to 5.47% from 8.13%, and net non-performing asset ratio declined to 0.7% from 2.21%. So we are seeing a great 40% rise in net profits, and the asset quality has improved significantly for the bank, as has been the case with most public sector banks, Shweta.
Absolutely. Public sector banks and private sector banks reporting some very robust numbers. What is it indicating to you, Amit? What is the trend line here?
It's continuing the trend of the last, almost 4 quarters now. The asset quality is, pretty much improved. There are no overhanging big accounts which can turn into NPAs. I think there was some sort of, issue which propped up because of future retail a couple of months ago. But apart from that, we are not seeing any asset quality issues in general in PSU banks. And remember, all the B2G projects, a lot of lending of the PSU banks happen to government companies, and all the government companies, whether it is in defense space, whether it is in railway space, they are getting big orders, ahead of elections, whether it is state or general elections. So I think the lending is good, credit growth is good, the asset quality is under control. There are no overhanging NPA issues at this point of time. So yeah, I mean, most of that good things are reflecting in the earnings now, not just for the Indian bank, but otherwise also.
All right, good things are in order for banks and for NBFCs as well. Bajaj FinServ results are out as well. They were out about 2 to 3 hours ago. Let's quickly run through some of these numbers. PAT was up about 48% year on year to close at 1943 crore. Revenue jumped 47%. Good numbers, Suyash.
Great numbers, and also along with Bajaj Finance, which came out with a healthy set of numbers yesterday. Now all subsidiaries of Bajaj FinServ have helped it report an all-time high quarterly profit. So Bajaj FinServ numbers, if we just quickly run through it, a 48.4% year-on-year jump in consolidated net profit to 1942.63 crores. Revenue from operations rose almost 47% year-on-year to 23,280 crore rupees, Shweta. So a good set of numbers coming in from Bajaj FinServ. And the asset under management stood at about 2.7 lakh crore, up 32% from the year ago period.
All right. So all in all, I haven't seen a sector so far that's disappointed, and bank especially has stood out. The banking sector has stood out. What is your position on banking stocks at the moment, Amit, before I let you go?
So there are no surprises. That's a good part about all the banking stock results, at least so far, whatever has been declared. So my sense is, the common thread is that most of them are saying that the NIMs have sort of peaked, and there is very little chance of, going, increasing their NIMs, given that we are at the end of the rate hike cycle. I think the banks will continue to do well, going forward. I just don't see a point of them getting re-rated as far as our analyst terminology is concerned. So they can continue to be a good compounder. They can even lead markets, in the short term, given the expensive parts in other markets, other pockets of the market. It's a part of the market which is very huge as far as the percentage is concerned. Almost 35-37% is in the financials. So it can do well, it can lead the market, but I don't see a re-rating happening in the financial sectors, given we are at the end of the rate hike cycle.
All right, Amit. Appreciate you taking time out this afternoon and for joining us with all those details. We'll of course keep tracking all the earnings as and when they come out, and we'll bring you all the updates at market close every day at 4 p.m. here on Newsline. But shifting focus for now, are you tired of spam calls? Do you get calls unabated during the day, while at work, driving home, even at night? You're not alone. Last year alone, telecom operators received, in fact, 9 lakh complaints compared to 8.5 lakh complaints that were received in 2021 and 3 lakh complaints that were received in 2020. So 3 lakh in 2020, 9 lakh last year. These were overall complaints that were received, and the data, of course, was shared by the government in Lok Sabha by way of response. Telecom operators discontinued as many as 32,000 numbers that were found to be in repeated violation of telemarketing regulations. Despite all efforts, there is no end to this menace. Starting today, we will continue to petition the government, petition telecom operators as well as authorities for active measures to end this harassment once and for all. Joining us is Sandeep Bhargava, who is the former EVP Vodafone Idea India. Also with us is Krishna Kumar, my colleague here in the studio. Krishna, good afternoon. Spam calls has become a problem that everybody, from a CEO to perhaps a young person who's just started using the mobile phone is dealing with. The problem here, to my mind, and correct me if I'm wrong and perhaps you can elaborate further, is that data is so easily available for everyone that telemarketing companies, no matter who you are, no matter what you do, the moment they get your number, they find a chance, they give you a call.
Right, true. And that's the reason why you've seen the Telecom Regulatory Authority of India wanting to put the onus on the user, the mobile phone user, the connection user, for them to register their consent on a website, on a platform, on whether certain numbers that they want to get the phone, spam calls or not. And therein lies the consent issue, because we keep discussing how yes, spam calls are a menace, but no, I'm sure like some of us find out about certain things only through these general marketing calls that we do get. So in that sense, whatever be the case, there has to be consent that is gotten from the user to even allow these calls to come through, and block it at that level. That's what, even before it comes to your phone, and that's what the Telecom Regulatory Authority is moving towards as we speak. So I'm still hopeful that something will be done, because Shweta, essentially what you're talking about is data from before, where no action it was taken. So yes, that data does sound really terrible, but the hope here is that going forward, now that you know the veracity of the problem, the size of the problem literally in terms of the final number of spam calls that people got, I think it's time that action is taken faster, and that platform which is meant for registering users' consent and also asking for it again and maintaining it, because consent once given doesn't mean consent forever, to make sure they get calls from certain numbers only and they don't get calls from certain other numbers, and that process needs to hasten up, from what I understand.
All right, so that would be a process that would allow certain telemarketing companies to call you on the basis of your preference.
Yes.
There is a two-pronged problem here. One is a problem that telecom authority will have to cater to, and that is with respect to consent and what people want to really, what calls they want to get, what calls they don't want to get. Other problem is with respect to data that is freely made available to a large number of companies, as a result of which they profile you on the basis of the car that you drive, on the basis of the loan that you have, etc., etc., all that information making you a potential customer.
The Telecom Regulatory Authority will turn around and say, what are you going to do about your Facebook feed? What are you going to do about your Instagram feed? There's so much spamming that's going on in our Facebook and Instagram feeds and our Twitter feeds, simply based on because our phone listens to things. You start seeing things in your Instagram because you had a conversation about it with your phone in your hand, not even on the phone. So, the question here is that data and data protection is a larger problem. Spam calls is a more specific problem. When there are specific numbers that are always calling you, you can always, find a way to put those numbers, and also make it clear that telemarketing is also a business of its own. Let it exist and let it be done in a regulated sort of way. So, you can't just wish away telemarketing completely, from what I understand. So, you've got to have telemarketing, but you can have more saner telemarketing than people just calling you because they want to call you. And sometimes we've seen the spam numbers call you thrice over because you cut their call three times. Because so that's the kind of situation we live in. It's insanity right now, the number of spam calls we're getting and how persistent they are. But going forward, what I'm hoping for is more a regulated environment for telemarketing as well to exist. At the same time, users to not be troubled with calls consistently from a huge range of people. Yes, of course, all of this will go down back to where did they get your phone number from which data base did they get your phone number from. But then again, with the where all our phone numbers are available right now, that is where the user's vigilance comes into place. Shweta, really make sure your phone number is not available across a variety of social media platforms. Make sure your mobile number is not put in any kind of a public forum for it to be picked up by just about anybody. So it's the same way, I think, like social media, you don't want people to know too much about your life. Then don't show too much of your life on social media. It's the same way, you don't want too many people to call you. Just make sure your number is not given out to that many people.
Absolutely. Make sure not to give out your number to that many people.
And also simple to start with.
Reach out to you. And I agree.
To start with, use Truecaller. I mean, really.
Right. So I think the idea here is not just, whether you're not putting out your numbers out there for people to easily call you. Right. The idea is that even if you're putting your numbers out there for people to not call you, you're not giving them out freely, you're not handing them out at malls, and you're not handing them out at theaters. you are genuinely going to buy a product where you are required to write down your number, in which case too, you know, and I remember I'm taken back to a story I did in a former organization, Krishna, where we were supposed to understand how easily is information made public and made available. You could go in Delhi today, in certain parts of Delhi, you could go to, for example, you know, Nehru Palace, and you could get numbers of people on the basis, and there's a huge database available on the basis of your income, on the basis of where you live, on the basis of car you drive, on the basis of, you know, the loans that you've taken, on the basis of home that you have. You can use any of these filters and easily buy this data. So my concern is, it's, you know, onus of course is always on the user to be careful. You've got to be careful, you've got to be careful. How about data protection? Which is where I think it becomes a concern of not just the telecom authority, but authorities in general, who are expected to protect our data.
Right, it's true, but global data protection rights is a larger debate. I really wonder how the Telecom Regulatory Authority of India is going to take this forward, but I think that's the reason why they're trying to first of all vet all these telemarketing calls, which from where these numbers come from, these calls come from, and also they finally tracked down to the number of spam calls out of all of them. And then you have a final number on them, and in the meanwhile they're trying to put up the platform. So you know, I still at this stage will only look towards the Telecom Regulatory Authority of India's further steps in terms of, you know, ascertaining users' consent into getting these telemarketing calls.
Absolutely, and Sandeep Bhargava, who's currently founder of Leap Edtech, is joining us this afternoon. Sandeep, good afternoon. Thanks very much for taking time out. I want to quickly begin by asking you, what can users do at this point in time to protect themselves from unwanted spam calls? There are different types of them, different variety of them, but what can we do imminently at this point so as to protect us?
See, I think you very rightly pointed out to the question. The ecosystem is too large. And it is highly dependent on us as an individual to ensure that we don't just keep on sharing our data to everyone. We should see and read the consent which is to be given and only give it to authorized people who are supposed to collect this data. Otherwise, what happens in a very subtle way, you go to an exhibition, you go to some area, somebody will give you a slip, sir, there is a 5-day holiday trip. Why don't you give us your details? And people just sign it off on the lure of getting a trip, free trip, and they sign it off. So these kind of data which is being unsolicitedly given is a real problem for us. So it is not only the telemarketing companies, it is we as an individual, we have to really secure ourselves to ensure where we should give and we should not give our data. So that's one prime thing. Secondly, we should keep on registering on the DND at the TRI website as much as possible. And people who are educated, they can just do a tweet, they can write an SMS, there is an SMS number given. Keep on doing it so that awareness programs for this should be much more put across educationally in schools, colleges, marketplaces. Like people advertise for their products, at the same time there should be phone company ads also, or some operator ads also. Don't answer these unwarranted calls. Register yourself on this particular number, send an SMS, do a tweet or block it. So these actions are also very important on part of the consumer to safeguard yourself and ring fence from these unwanted callers, because you are the one who has given the data. That is why they are calling you. They don't have it otherwise. And penalize the companies who share the data, who sell that data in the market. So that's a two-way process. You ring fence yourself, protect yourself. As rightly pointed out by our colleague Krishna Kumar, data privacy laws are still not there. So once you have those data privacy laws in the country, there will be a lot of curb on these companies which are sharing the data. So they need to be penalized and made responsible.
Absolutely. Okay. And one of the first steps that perhaps somebody can take is to activate caller ID. Let's get those graphics back on screen. Let's quickly apprise our viewers on how to do it, Krishna. How do you activate caller ID and spam on your Android phones? Let's get that graphics quickly. You open the phone app, you tap the 3 vertical dots, then choose settings, post which in your settings menu, you select spam and call screen to turn it on or off. You can also choose to filter spam calls. These calls are visible in your call history. You can check the Google Phone app help page for more information on activating caller ID. Now, these are some of the very, very basic steps that you can take that a lot of people are not aware of at this juncture. What, according to you, Sandeep, and before I let you go, this is an important story. I'll keep coming back to you. In fact, we as a network are hoping to, petition the government, petition authority, and make it a campaign. We want this menace to end. Consumers want this menace to end. What are some steps that government should take in your view? We talked about a digital consent acquisition that government is trying to build. This data, nearly 1 million, is as of last year. We don't have data for this year just as yet. The year hasn't ended. But I'm assuming from the way we deal with it on a daily basis, we're trying to constantly disconnect these spam calls. The data could be higher, not lower. It's never been lower since 2020. What, according to you, are some of the most imminent steps that Government of India can take, the authorities can take to ensure that people are they don't have to go through this torture, this harassment?
If you recently see, the government has taken a step where they have asked the operators to put in AI-based filters into their system. So that's happening while we are talking. The couple of operators have already put that in place, and we are finding some difference. As a user, I can say, I don't know about the others, but as a user, I can say that what was happening the last 2 months has really gone down. So the filters are working somewhere, but it is not wholly and solely responsibility, as I said, of the operator to do it. Because these telemarketing companies are very smart. They will change their numbers. They will have one number today, they will have a set of 20 numbers and then make calls from those numbers. So to get out of the ambit, so government also has to increase their vigilance on these kind of companies who are frequently changing the numbers, get the data from the operator, that which are the bulk numbers getting changed every day. So some kind of a regulation, some kind of awareness and screening has to happen on that aspect as well, that how to really catch hold of these culprits. So it's an entire ecosystem, Shweta, as I said earlier, which has to work. The consumer, we as consumers, the government regulators and the operators, all three have to do a lot of efforts. And as we do a lot of awareness programs in different vernacular languages, we should also do these, what steps you just displayed on the Android app, for example. A lot of the people in the country are not even aware of this. So there should be posters going around as part of CSR initiatives of these companies, of these operators, of these phone companies, to put these printouts and send it across. People are not even, I will say, educated so much to go through this entire thing and do it on their own. So some way of educational programs have to happen either by FM or by TV channels or by posters, whatever way. We need to put this across. Because people just use phone as a device to listen and to send a WhatsApp. They are not bothered about anything else. And if you give them this kind of a poster, what you showed, it will never happen. They will not be able to do.
Okay, well, hopefully they will do. Sandeep, hopefully they will do, and hopefully, there's more messaging around this. I think it's an important, advice to perhaps have more messaging around it, to have more flyers in place, to have more posters in place that tell you how to protect yourselves. I mean, of course, you are going to raise a complaint. Of course, you're going to ask government to do something about it, but perhaps certain few steps, basic minimum that you can take on your own to filter out some of these calls. Yep. Sandeep, thanks very much for joining us with your inputs. We will, of course, keep coming back to that story again and again on News9, but moving on. After Byju's, another startup is wrestling with trouble. Homegrown quick grocery delivery provider Dunzo has received legal notices from at least 7 companies since March this year for non-payment of dues. This according to, of course, media reports that are out there. Dunzo is said to have received legal notices from Google, from Facebook, from Glance, among others. Dunzo's outstanding debt to vendors is estimated around 10 to 11 crore rupees. Now, Dunzo is struggling with financial losses, is struggling to keep operations afloat. Among a slew of news reports coming in from Dunzo are massive layoffs, delayed salaries, non-payment of dues, and closure of stores. What's hurting Dunzo? Let's understand from Barnik Chitran Maitra, who is the managing partner at Arthur D. Little. Krishna, of course, continues to be with us. Barnik, good afternoon. Thanks for joining us. What's happening at Dunzo's?
Yeah, what's happening at Dunzo is happening at several startups who don't have a unit economics profitable model. This is a startup which is burning cash, and for them to be viable, they need to raise a lot more cash. They had a recent convertible round which failed miserably with very little participation from existing investors. So this is a company which is out of cash runway. When you're out of cash runway, you have to slash costs, you have to take hard decisions. And in this case, the startup is not following up on obligations to service providers which they have. So this is not surprising if you're a startup which needs to continue to burn cash and only survive with new capital raises. In this funding winter, you will die a very painful death.
Absolutely. Funding winter, painful death, and this is a story that's repeating in a loop now, Krishna.
Right. And the question that I would like to ask Barnik is this, Mr. Barnik, tell us, is quick commerce, quick delivery commerce, it's in itself a business model that is yet to be, figured out how to be made profitable?
Yes, no one knows how to make it profitable. Everyone who's in the space is losing money, starting from Swiggy to Grofers, now rebranded as Blinkit, Zepto, all of them are burning cash. In India, the traditional belief is that once you build scale, your unit economics will get better. That has not been proven in the delivery space, particularly for quick delivery and commerce. So unless you're willing to charge the customer and the customer is willing to pay for quick delivery, this is a business model which will never be unit economics profitable. So right now, this is just a business model which is not working. So you have to charge the customer. You have to charge either a subscription fee or charge a significant premium for 10 minutes versus a normal 1 to 2 hour delivery.
Right. It's interesting you say that because it's a social and a cultural phenomenon. Quick delivery commerce. Everybody enjoys it. Everybody thinks it's made life so simple. I remember some of these Dunzo ads began with how you don't need refrigerators anymore because you can order your morning vegetables every day and it'll come home in 10 minutes. Mm-hmm. This is a social and cultural phenomenon which is extremely helpful to people across the big cities of this country, if not the smaller cities. How is it then that something that people love, a product that has so much love and affection from people, is not being able to find a way to be profitable?
And just to add to that question, is it just a Dunzo specific problem?
Yeah.
Because you've seen Blinkit, you've seen Zepto, all of these quick delivery commerce apps that have propped up in last couple of quarters and months. Is it just a Dunzo specific problem, or all quick delivery apps are suffering?
No, it's not a Dunzo specific problem. This is an endemic industry problem in the quick delivery space and the grocery delivery space. I think despite this being a huge convenience, the question I ask is how many users are willing to pay for this service? Right now, most of these delivery apps charge between 15 to 30 rupees for a delivery. If you look at unit economics, if you're not charging minimum 100, 150 rupees, there's no way it's unit economics positive. So the question is, again, is there a real Indian consumer? And are there enough Indian consumers who are willing to pay the money which is needed to make these business models sustainable? And the answer, unfortunately, even in this new India, is no in most cases.
Mm-hmm. All right. And this is a story we continue to track. It's a story of Startup India. Remember, India has third largest startup ecosystem in the world, but the momentum seems to be fading, Krishna. In what could be indicative of a slowdown in the Indian startup ecosystem, new additions in the unicorn list declined sharply in 2023. India added only 3 unicorns, or a privately held company with a valuation of $1 billion in 2023 as against 24 years ago. Now this according of course to a Hurun India Future Unicorn Index 2023. The slowdown is indicative of a prolonged funding winter or a slowdown in investor interest amid global uncertainty. The overall number of unicorns has also declined from 83 to 84 a year ago period, with companies witnessing a dip in valuation as startups lose money. Startups are losing money and losing money like never before. Dunzo is just one example of it, Krishna. There are many more startups that are hurting at the moment. Byju's continue to hurt. Other players in quick service delivery are hurting. Right. What's happening here? What are we looking at? Is it just a problem with funding winter? Is it just that investors are not so sure whether some of these companies continue to offer the same value as they were offering a year ago? Or is it because these companies have burned down their cash and their business model was not sustainable?
So let's start with the industry. I think in India, we've not seen prolonged cycles of such startups going through boom and bust. But the harsh reality of the startup world is that only 3% of startups who get an institutional check ever go for IPO. The failure rate in startups, even after they get funding, is around 80 to 85%. So we are just seeing some of these numbers play out, right? I think what we are also seeing, and I wouldn't say this is the root cause, 2022 was a peak of exuberance where anyone who could move and could register a startup could get capital, versus now where investors have genuinely become circumspect because their LPs are asking them to be circumspect, and startups which don't have a viable model are not surviving. So it is a difficult world. The Darwinian for survival of the fittest applies most to startups. We are still not seeing spectacular failure rates, which is the norm for the industry. I suspect of your 84 number today, there are probably half of them who are no longer actually a unicorn on their own books, but they've not actually gone out and announced it. So this is the reality of the startup space. You will have 98 to 99% of startups fail, and some of them will fail spectacularly. In India, it's just a little bit of a perfect storm where you have the funding winter and a lot of cash burn startups who don't have the ability to raise capital. But Shweta, if you look at your previous segment, 2 segments back, the economy is booming. Corporate India is doing well. Well-managed companies are showing great returns and are showing great earnings. So what's wrong with startups? Is their fundamental model? Is their model which is not unit economics positive? And there has been indiscipline in the system, which was fueled by excess funding over the last 2 years.
All right, so indiscipline in the system, excessive burning of cash that is no more at your disposal, as a result of which you're cutting cost, and that's happening across industries, in startup specifically. I think it is also an indication of why, Krishna, we don't need to celebrate unicorns. It's not about celebrating unicorns, it's about celebrating sustainable business models. I think this, for me, is the takeaway. You've got to be sustainable. You can celebrate becoming a $1 billion, $1 million company, but if you are going to lose in the long run, there's going to be no joy coming your way in days and months and years.
Right, absolutely. It's not, valuations are an idea of what you're capable of, whereas profitability is the actual proof of the pudding.
Profitability is the proof of the pudding. I think Krishna has put it more appropriately. Barnik, thanks very much for joining with your inputs. We will, of course, keep coming back to you on that very story, but we're going to move on for now. A number of big tech companies shared their quarterly results, signaling how higher the stakes are in the battle for AI supremacy and what it will cost tech giants in months to come. Google's parent company Alphabet's share rose 5.6% yesterday after company beat expectations for the second quarter results. Alphabet is looking to set and is hoping to add about $100 billion to its market cap through AI. Microsoft's share also fell about 3.6% as the company laid out an aggressive AI-related spending plan, saying that deeper investments in AI is required. Meta has also released its financial results for second quarter, exceeding expectations with a robust rise in advertising revenue. The company reported a 12% growth in ad revenues, outpacing even Google's ad revenue by 3%. These are positive figures. They signal that consumers